This is the only strategy I needed when I started trading ICT, and I still use it. This backtesting video will help you to master the strategy with different possible scenarios. I already explained the strategy before, so make sure to watch the other videos too to ensure to have a full understanding of the strategy. If anyone needs a one-on-one mentorship, check out the description. This is Mulham, and let's get into it. So let's start the session with $1,000, and then the pair is gonna be, as we discussed, is gonna be Euro Pound, so Euro GBP, this one right here. And we're gonna go from, let's do August 20th until September, so it's gonna be a month. Okay, it's gonna be 19th of September. Okay, today is the 22nd. We're gonna go and call this 4 hour and 15 minutes. Okay, and we're gonna save and we're gonna start the sessions. So now starting here, what do we have? So we have a sweep here, but this is the daily candle or the starting of the week sweep. So I'm gonna ignore this for now, and I'll be looking for price to take this level of liquidity. This is the first one right here. Why? Because we have a fair value gap above it. So now, you know, this unfilled part of the fair value gap, this is a high probability one most likely. And let's see. So we have this sweep. I'm gonna ignore this for now. I'll be most likely looking for this one. Now to the left, if we go to the left, what do we have? There was already a sweep here. Price is inside of a fair value gap. Let me mark this extreme one in case price goes there. And that's it for now. So I'm gonna put the 15 minute, 15 minute right here. So when I play, it's actually a 15-minute candle that is playing. So there you go. Now there is no sweep, nothing. Price is approaching. Okay, price goes there. So price takes this high right here. Now I'm gonna go to 15 minutes, and it is the London kill zone. Okay, it's the London kill zone. So nothing we have here so far. We have nothing, and the market section shift is too far away. So let me play one more candle. Let's see what happened. We have this candle. It's still not closing above the fair value gap. So there is a respect for the fair value gap going lower. Now, in this case, what do we have? So a very far away fair value gap here. A small one here too, but the main one is here. So breaking below this fair value gap is a small indication of a market structure shift. So 15 minutes, let's see what happened. Price goes up. No other liquidity sweep here. So price did not sweep liquidity. Went lower. Okay, still. So this is a closure below the fair value gap and also below this intermediate term low. Now we are out of the kill zone, but most likely I'll be looking for a continuation to the downside on the New York kill zone. So now it's 6 a.m. so just 1 hour, and I'll be looking for a trade on the downside. So here is now, just because we can see that price reacted from the fair value gap, we had this fair value gap respected, right? And then price now going lower. So I'm gonna go play one more. We have a fair value gap right here. So most likely we're gonna enter from this fair value gap, and it's already 7 a.m. so that's a good time to enter this. So I'm gonna go here. Let me go to 5 minutes just to see what's happening. Okay, there is nothing. There is this breaker block where price is reacting from, but I'm gonna stick to the 15 minutes actually. So we're gonna go short here at the beginning of the fair value gap. Stop loss, I would go above this high and then take a profit. Let's do 3 to 1. Right, let's do 3 to 1. This order. Then it's gonna be limit order. Save, and that's it. So let's see. Price starting to go. Okay. Now if price takes a major liquidity level, I'm gonna cancel my limit order. So still, let's take this one, but not this one. We're still on the New York. Okay, so we're out of the kill zones, and I'm gonna cancel this because we are out of the kill zone. But this is gonna be my entry. This price comes there, almost there, and price actually goes down. So we don't have, and I think it's gonna go to the take profit. So no entry for this day. We had no entry. Price was too close to the fair value gap. You see, too close. It was out of the kill zone. but it was a nice, you know, this was a nice sweep right here. So we did not get a trade here. Now back to the 4 hour. Let's see what are some of the swing lows or swing highs that we have here. So at this point we have this swing high, and we also have this swing low. So let's mark those. Those are the fractals highs and lows that we have. So price actually taking this low right here. Let's see what happened inside of here. Back to 15 minutes. Now we're on the Linden kill zone, and we can see that, so I think I missed this. We can see that price did not close below this level, so we don't really need a change of character. Just using a fair value gap, it's gonna be right here, but I missed this. So this fair value gap, we can actually find an entry here. Not sure if it's gonna work, but an entry here, stop loss below the low. Most likely I'll put it here, you know, just below this, and targeting 3 to 1. See if it's gonna go there. Okay, so this is gonna be losing trade, but I missed it. So this was you know, I missed this trade. Now back to the 4 hour. So price taking this low. Now price taking this low. Let's go to the 15 minutes and let's see what happens. So we are in the near kill zone, but it's almost there. So we're done with the kill zone, so we're not gonna enter anything from here. So there's no trade here. We're gonna keep moving. I'm gonna go to the 4 hour and see what do we have here. And we have a sweep of this low actually. I'm just, you know, I'm trying to go fast, so I'm gonna put it on the 4 hour. And if we go to the 15 minutes, then it's gonna be the 15 minutes. So what do we have here? You can see that, okay, there was a sweep and a nice sweep. Price goes up, but we're not in kill zones. Let's see what we have. So this is the Asian kill zone. And we are on the Linden kill zone. There was a sweep also again. So I think in the 4 hour, it's also another sweep. So there is another sweep on the Linden kill zone. We have this sweep right here. Price is going up. Let's see if we have, so price continue to the downside, okay? And price actually sweep this low. So there is a sweep of this low, but I think there is news here because this is a very big candle right here, right? So we're not really interested in this one. And price keep going up, and we have a big fair value gap, but definitely not entering from this one. So let's keep an eye at this high right here. It's not a fractal high, but it's a high that I think there is a potential reversal from there. So let's keep going up. If we go to the 15 minutes, it looks like there was no reversal from here. You see, price just kept going up. So, and we are actually out of kill zones. But now we have this sweep of this high right here, and let's see. So price closed above and then went lower. So where's our change of character? The structure right here is kind of, you know, inside of each other. So this is my change of character on the 15 minutes, but let me just check the 5 minutes, what's happening here. So at the 5 minutes, we can see that, okay, price is going down, going up, and then this is my change of character on the 5 minutes, right? And price kind of closed below it. The thing here is this: we had a fair value gap that was respected, right? Respected fair value gap, and this respective fair value gap created another one. We have one here, and then followed by change of character right here. So mostly price will respect this fair value gap. So there's a potential of an entry from this fair value gap. So if we have it, you know, I would say 50% this fair value gap, stop loss above this high, and go in 3 to 1. So 3 to 1 right here. So this can be a nice trade right here. Place order. Now if I have another candle that closed below this level, that's even gonna be better. That's gonna be better. So let's see. So yeah, that's a confirmed market section shift. And also this sweep on the higher time frame, that's also, you know, another thing that, okay, price is approaching the fair value gap. We are in the trade. Nice rejection, and we have a fair value gap right here. So respecting this fair value gap can tell us that, okay, we are in the right direction. And price not closing above, okay, still very nice. And coming back again to the fair value gap. Very nice. So I'd be looking for price to go to the, okay, very close to the, okay, there you go. So 3 to 1, that's the first trade we took. Right, so let's remove all of this and go to the 4 hour. Now, as we said, we can enter on the kill zones, but then if you want to hold, you can hold out of the kill zones. But the entry should be in the kill zone, okay? Back to the 4 hour, what we see here. Now we have this high right here. And we have this low. And because this low is too far, we can keep an eye at this fair value gap also if there is a sweep inside of this fair value gap. So there's nothing as of now. Play. And there is a sweep of this high again. So this high, another sweep. Do we have a fair value gap? So there is a fair value gap here, but the sweep was not inside of a fair value gap, but maybe a fair value gap on the 1 hour instead of the 4 hour. You see? So I'm gonna go to the 15 minutes, see if we have anything here. So we are inside of the New York kill zone and it's 8:45. Our change of character in this case is right here. This is our structure shift. However, we can also look at the inverse fair value gap. So we have a very small fair value gap here, but the main one is this one. So price closing below this level is a market structure shift and we can enter, but still we have no fair value gap here. Now, if another candle closes below, I'm gonna be entering. Okay, price actually keeps going up, so I'm still waiting for this level to be taken before entering any trade, or to be disrespected actually, and price actually keep going up. And we are out of the kill zone, so I'm gonna go back to the 4 hour, look for any other liquidity levels. So what are some of the other liquidity levels that we have now? So this one is taken. I mean, we still have that one. We have this one right here, and it has a fair value gap below it, so that's a good one for sure. And above we have this level right here, as well as this one. So let's see where price goes to. Right, and price goes down into this fair value gap. Now you can do this also with fair value gaps, but I like to have a sweep inside of that fair value gap. But for this video, we're gonna focus on liquidity levels, fractal highs and fractal lows. Okay, and now we have this fractal high, which is a closer one right here, and also another one here, and this one has a fair value gap below it, so potential, you know, maybe a nice liquidity sweep there. And price taking this high and this high, so let's see what happened here. 15 minutes. Now the first high, you see price did not respect anything and goes up, so we didn't have any entry here. And then the other one, price coming lower, but right here we don't have a market structure shift yet all the way down here or all the way down here. However, we have this fair value gap that we can also keep a look at, this inverse fair value gap. So if a candle closes below this, then that's a market structure shift, okay? But we don't have nothing so far. There is nothing. Now let's keep moving and see what happened. Price actually react from this fair value gap. Goes up. Now we're out of the kill zone, so we're gonna wait for New York kill zone to start. And price almost takes this liquidity level, but no, I think as of now, price goes lower. Closes below this level. Now another case here, since the market structure shift is all the way down, we can also look at another type of the market structure shift, which is the intermediate term low. So you can see how price was going up, went lower into a fair value gap, and then went up, not closing above this level, but we can still use this as a market structure shift. So just because this is now an intermediate term low, we can also look for a market structure shift, and we can see that this high is still respected. What do we also have here? Oh, so we have this fair value gap also, so we can actually look for an entry from this fair value gap because price still respecting that sweep. So an entry at the beginning of the fair value gap for this case, right here, and stop loss output it above this high and take profit. It's a 3 to 1. Now let's go to the 5 minutes, see what's happening here. Price going lower. Okay, now you see why I put my entry at the beginning of the fair value gap, because in the 5 minutes we have a very small fair value gap here, so price can just come here and react, or it can go all the way up here. But you know, if price wants to go low faster, then it's not gonna go all the way up here and then comes lower. So, you know, just not to miss the trade, I put it here, and that's the beginning of the 15-minute fair value gap also. So you're gonna place an order here, limit order, and let's see. So, okay. Actually, we are out of the kill zone, but I forgot. I took this by mistake. So even if it's a loser, I'll just count it because mistakes happen, and maybe you made this mistake on the live market. So, you know, I'm just gonna let it go. So we're holding the trade yet. You know, I would say it's only 45 minutes after the kill zone. So I know that's a mistake, but we're just gonna count it, okay? And price actually moving down very nicely, and there is no big rejection from this low. So price can go to the 3R. Let's see if it's gonna go there. Small rejection from here. Price still not going there. Okay, that's kind of bad. It's a bad thing. Is it gonna go? Okay, there you go. So that's another 3R. If you want, you don't count it. It's all good, but you know, mistakes happen. Now going back to the 4-hour again. This is just a practice of the, you know, the strategy itself. It's not about having a win rate, because this is going to be only going for a month. We cannot say, okay, the strategy has this specific number of win rate because of this month. But the thing that we are doing is practicing. We are practicing the strategy. We're practicing the concept. Now we have this low on the 4-hour. We have this high and also this low. This low can be also, you know, I'm going to mark this one too. You can also look at this one. We have this one, but mainly this one because we have a fair value gap below it. So let's see where price is going to. Going up. Let's mark this one too. This one right here. And price just keep going up. So let's see if there is a reaction at that level, the first one. So price did not take this one, and then it takes it. No change of character, nothing, and price keep going up. So we are out of the kill zone. We do not have an entry. Now price is close to the other liquidity level, and we are also out of the kill zone. So we're not gonna take this one, even though it looks like it worked, right? Because we had, I mean, the market section shift is gonna be all the way either right here or right here, which doesn't happen. However, we have this intermediate term low that gets broken, and what do we have after? A fair value gap, right? This fair value gap gets filled, and then there you go. But we're not entering this one. It's out of the kill zone. So let's move this. Now we have this high as a liquidity level. This one is already taken, and we can also look for this low. And price actually taking this high. So 15 minutes. See what happened here. This would be a winning trade, but just because we were using the 4-hour, then it skipped a lot of the data here because we had a liquidity sweep on the 15 minutes, and then any fair value gap after this liquidity sweep is a valid one. So this one right here, liquidity, a fair value gap, entry from here, 3 to 1, it's achieved. So that's a very nice and clean trade right here, but we did not enter it. But this one, if I was actually you know, trading, and if I see it happening before, I would take it. So this was a very nice trade. Okay, it would be something like this, you know, the fair value gap, stop loss above, and very nice 3R. Okay, now it is what it is. You know, the main purpose of this video is to practice the strategy and show you how I think. It's not about, you know, backtesting the strategy itself and giving you, you know, a win rate, because if we do that, we need much more data. We need like months or years, right? And I cannot do this. Price taking this high already. We had a winning trade, but we did not take it. So yeah, now let's move. Let's see what happened. Price going lower. Not interested, not interested, not interested. Still nothing. Now this low right here, that's where I'm looking at. 15 minutes. Let's see if it's a kill zone timing. Okay, now this one, a very nice liquidity sweep with a wick, so any fair value gap we can enter from. But then it looks like price is going down, and then another sweep. So let's see if we have a fair value gap. But the thing is that this is the end of the kill zone, so we're not taking any trade. But mainly if it's in the kill zone, then we're gonna take a trade. If actually price closes below this, there was a body closure here, then this is our change of character right here. So let's see what happened. I mean, we have a potential fair value gap here. So if it was in kill zone, we would be entering from this one, but we are out of the kill zone, so we can now do anything as of now. We're gonna wait for the New York kill zone. So let's see what happened. Price actually goes there and then started to go up. Now this is the start of the New York session. The liquidity sweep is still valid. However, this is a too high price to enter from. This is too high. You know, stop loss is going to be all the way here, all the way here. That's too high. So in this case, I don't think I'm going to enter here. Maybe I would wait for another liquidity sweep. Also here's something. You see this fair value gap? When this whole fair value gap is disrespected, then that's where the trade is a higher probability. But having this fair value gap, price can actually react from anywhere from this fair value gap and go lower. Also, another thing is this breaker block right here. You see this breaker block, the small one? Price can actually react from here, and we can see this tab of candle. It looks like it's reacting from here. So not really interested at this point, not really interested. If there is another liquidity sweep, then I'm gonna be entering. And yes, it looks like price is going down now. There's nothing. And you see, so if you want to go for long, only when this fair value gap is disrespected, a closure above this fair value gap is where you enter, otherwise not entering. And we can see how price respects this fair value gap and goes lower. That means the direction or the order flow is actually going bearish. This is actually how I look for only high probability liquidity levels, by using this logic. You know, I look for PD arrays in this direction to be disrespected, but you see this order or this breaker block actually right here is holding so bad. So now switching to the 4 hour, let's see what happened here. So this level now no more, and price actually goes lower to this level, and we have a fair value gap here, unfilled part of the fair value gap. So let's go to 15 minutes. And okay, so price comes here, but we are out of the kill zone. So no entry here, no entry, even though I don't know if it's gonna hold or no. Okay, it's not holding, but we don't have an entry here. Now back to the 4 hour. Let's see what we have here. I'm gonna remove this. Price is going lower, going up. I'm not looking for those highs. I'm not looking for maybe this one right here. I'm looking for the valid pullbacks or the fractal highs and lows. You see price going up, and we have this fractal high right here. Gonna be looking at this. Price goes lower. Let's look for this one too. And I don't know what happened here, but let's go to 15 minutes. This is the daily candle start, so let's skip this. And now there is a liquidity sweep right here at this low. Is there one? Let's go to 15 minutes, see if it's taken. The low of this is 5.3. This one 5.3. So no liquidity sweep, still no liquidity sweep. There is a liquidity sweep right here, and price actually closed above, but it's out of the kill zone. So if we were in the kill zone, we'd be entering from this one. And there's another liquidity sweep. Price is going up. You know, if you go to the 4 hour, let's see. Okay, the candle swept this. There's another liquidity level here, but there is a potential entry here. This fair value gap, actually price closing above this fair value gap, is my market structure shift right here. You see how price did not displaces above this high? What is a market structure shift? It's displacement above highs and lows, right? You see price is coming lower. Now there is a closure above. Now if price come here, I'm gonna be going long right here at this fair value gap. Stop loss is gonna be below this right here, and I take profit. I will go 3 to 1. Right, so let's place an order limit. So let's see how it goes. So we get filled here, and price actually hit the stop loss. So yeah, so this was a losing trade. Go to 4 hour. Let's see what we have here. There was a sweep here already, but still, and also this sweep this low. We were in another trade when this was happening. So now let's go and look at what other liquidity levels that we have here. So let's keep an eye at this level right here, as well as this one, and to the upside we have this one, right? Let's see, price actually goes up aggressively to this level of liquidity. We go 15 minutes. We can see that this one was, this is inside of the lender kill zone. Just 15 minutes left until the end of the lender kill zone. So looking at this level to be broken in order to enter here, as the structure is not that clear and it's out of the kill zone. So we're gonna wait for the New York kill zone to see what's happening here. And the New York started. Let's go to the 4 hour. And we have this low, so nothing here. We go back to 15 minutes. There is this fair value gap, and there is the other one, the other fair value gap, but I don't feel, you know, still this low is the main one, not this one. So I'm not actually looking at this, okay? But if price comes here, maybe I would be interested, maybe. And price actually goes to this low right here. So let's see if there is a reaction from this level. There's nothing. To the other liquidity level, do we have a reaction? There's nothing, and we are out of the kill zone. So back to the 4 hour. We did not have a trade here. So let's see where we go to now. 4 hour. Let's see. Price actually taking this low right here to 15 minutes. So let's see. This low was taken out of the kill zone. Not interested. So still nothing. We're gonna let it go. And here we have this sweep of liquidity right here. So this is a very nice liquidity sweep, only with a wick. If we go to 15 minutes, is it okay? So it's just the end of the New York kill zone, so we cannot do anything about this. I'm gonna go and skip this, and we're gonna mark the other liquidity levels that we have. We have this one right here, and this one all the way up, this one. So let's see where price goes to. Price is too close to this. Now I'm gonna go to 15 minutes. What time is it now? It's the lender kill zone. So let's wait actually for this level to be taken. Now taking this level means that price is taking the 4 hour level as well as the previous London high. So that's, you know, 2 levels of liquidity at the same time. Let's see where price goes to. Now this is 615, right? And price doesn't close above this, you know, very small closure above the liquidity level. That means price is respecting that level. So an entry without a change of character is also valid. A change of character would be all the way here, but we can also enter without a change of character if we have a fair value gap. So far there is no fair value gap. There is one here, and it's at the beginning of the New York kill zone. So let's see this. Right, this is a bearish fair value gap. Can actually enter from here. So let's do 50%. Okay, let's do here. Stop loss. I would go here instead of going all the way up, because there is no reason for price to go above this point. And we're gonna go 3 to 1. 3 to 1, just like this. We're gonna enter this trade. This is a very clean one, very clean trade. We have price not even closing above the liquidity level on the 4 hour. Let's see. Price still, you know, goes slightly inside of the fair value gap, and we get filled. Let's see where price goes to. A small drawdown. There is a reaction from this level. Small rejection. Price is going up. Now we have this fair value gap right here. You see, after price mitigating this fair value gap, where's the second one? This one right here. So price respecting this fair value gap means that we are in the right direction. So hopefully this fair value gap holds, right? And price goes to the take profit. And you see the fair value gap is holding. Price is close to the take profit. Now what do we have? The same thing here. After price holding here, we have this fair value gap. It hold, price did not close even inside of it, and then price entered the take profit. So that was a very nice trade. Now we go to the 4-hour. Let's see what's happening here. We have this level of liquidity. We have a fair value gap below it. Let's keep an eye on it. And we also have this fractal high, the new one. Price going lower, going up. Okay, there's nothing as of now. But actually price did not sweep this, but there is this sweep right here. So we have this sweep. There is a potential entry here also. So if we go to 15 minutes, there was this liquidity sweep, and also I missed this one. It was a very nice, I still think we have an entry here, right? So what happened here? On the linear kill zone, price takes the 4-hour liquidity level here, did not close below it, and then started to go up. Where's the first fair value gap here? It's this one. This is the first fair value gap. Then we can find an entry here. What happened is this. This is what happened. An entry here, and we're holding the trade. It's going to be something like this. So 50% stop loss below the low, right? And then targeting 3 to 1. I still believe this is a nice trade. 3 to 1, just like this. Now, what I'm going to do here is I'm going to still place another trade. Hopefully price comes to this, and we're going to see if it's a valid trade or no. I always miss this because it's the 4-hour, and sometime, price has already had the sweep and price reacted. But just to have a good analytics, I'm gonna place an order, and even if it goes to stop loss, then we're mainly losing this trade, right? So hopefully price comes to the okay. So now it's the same trade. Even if I entered here or here, it's the same. If price goes to stop loss, then that's a stop loss. If it goes to take profit, then it's the same. If you entered here, it's gonna be a take profit or stop loss. So we're still following the plan. And actually price started to go up from here. Okay, going up, taking this high. There is a rejection from this level. Mainly if it was me and I was in a trade, maybe I would close the trade here. Okay, and what is this? Right here, this is 2 to 1. So maybe I would close this, or I will go to the lower time frame and see what's happening, because there is a big rejection from this candle. But just for this backtesting, we're gonna stick to the rules and take profit. Now switching to the 4-hour. Okay, I'm gonna remove those stuff and we're gonna keep going. So we have those levels of liquidity right here and right here. See, price is going low up, and this level of liquidity is taken. Switching to the 15 minutes is the London time, and what do we have here? Price coming lower, closing below, and price going up. Here's the thing, the change of character is all the way right here, right? Now another one is this. We have a small fair value gap here, another fair value gap here, and another fair value gap here. So closing above this is an early indication of a market structure shift. We don't have it yet. There's nothing yet. So yeah, and price, you see, reacted from here, and we're out of the kill zone. So we're not entering a trade here. Let me remove this. And there is another sweep. The market structure shift is right here, right now. What do we also have? We have a sweep here, and we have a single fair value gap in this leg. So a singular fair value gap right here means that if price closes above it, there is a potential inverse fair value gap entry. Price still not closing above it, and now price closed above it, right? If I was in the kill zone, an entry would be right here, or slightly below. You want to go 50%, or you want to go at the beginning of the fair value gap. Stop loss just below this level, and targeting, let's do 3 to 1. And you see how the target is aligning with this, but I'm not going to enter this. Why? Because we are out of the kill zone, and price doesn't give that entry, and it goes to take profit. So not interested in this. Now what is happening here? We have price closing above, right above this market structure shift, and displacing above. So we can still look for an entry here, but let's take a look at the 4-hour. What do we have? This is going up. Okay, 15 minutes again. So there is still a valid entry from here, or from the breaker block. So we're gonna have an entry here, at the start of the New York kill zone. So New York kill zone started. We have this level. It looks like a level that is gonna hold. We had a liquidity sweep and price displacing. So yeah, an entry at this level. Stop loss below the low right here, and a 3 to 1. Where is it gonna go? 3 to 1 right here. So placing an order, limit order. Let's see, even though this one, we had a liquidity sweep here, So let's see how it goes. So we get filled. Okay, and taking stop loss. So this is a stop loss right here. It's all good. Back to the 4 hour. Let's see what's happening here. And we have the sweep of a buy side liquidity, 4 hour. Back to 15 minutes. What time is it? Okay, it's out of the kill zone. You see the New York kill zone ends here. We're out of the kill zone, so we're gonna skip this. Let's play. Price is going up, going down, going up, taking this high right here. If we go to 15 minutes here, let's see what we have. So price closed above it, went lower, small retracement, going lower, breaking below this point. That's a market structure shift. There is this market structure shift. However, price is showing some strength from this fair value gap. You see, so this is the fair value gap right here. You see how price only closed this small candle. So if price actually closed a big candle below it, then I'm gonna enter. However, I'm not really interested as of now. Why? Because there's not much displacement, only right here, yes, but this fair value gap, I always want to see displacement over structure and over fair value gap. So if another candle bigger than this one closes below, I'm gonna be interested. But you see price coming back into the range. I'm not really interested in this, just because this fair value gap is holding and price goes up actually. So not really interested and out of the kill zone. It was not a good trade. Back to the 4 hour. Price actually goes above this point. I don't know why it skipped this, but let's go to 15 minutes to see what happened there. And it's actually, yeah, so it was not in kill zones. Let's switch to 4 hour again. What are some levels of liquidity that we can look at now? What do we have here? We have this high all the way right here, right? And we have this low, this one right here actually, and also this one. So let's see what happened. Price goes close to this one, closes below. Oh my god, this is a very huge closure. Price going lower, not interested. Going up. This is into a fair value gap. We can trade this one. Now we have a fractal low here. I'll be looking for this one. And there you go. So let's go to 15 minutes. And this is a huge candle closure below. So I'm going to be waiting for a change of character, or at least this fair value gap disrespected. But there is also another thing. We have this liquidity level taken just before it. So not really a good thing. So even if this fair value gap is disrespected, I'll think twice. So let's see what price does. Inside of that fair value gap, we're out of the kill zone, so we're not trading anyway. But I want to see how price, or how this fair value gap hold. You see how this fair value gap is holding? That's why we don't look for trades like this. 4 hour again. Price takes this low. Now go to 15 minutes here. So there is this sweep right here, but we are still not in the kill zone. We're gonna keep going. Price is respecting this level, not closing below it. And you see price coming lower, going up, coming lower. So a potential change of character right here. So price going up. Okay, there is a closure. If we wanted to enter on the lender kill zone, this is a very high entry, right? Very high entry. Now there is another fair value gap just right here, and price can actually come here also. If you go to 5 minutes, see what's happening. This fair value gap can be filled also, yeah. So you know, let's take a look at what was gonna happen on the New York before. Like, let's see if price is gonna retrace down, and then we're gonna think about entering. Okay, so price is retracing down. I'm not gonna enter from here. I'm gonna be looking to enter at this fair value gap, because I believe this is the almost the extreme fair value gap. So entry from here, 50%, and stop loss just below this low, right? And then targeting 3 to 1. So 3 to 1 right here. The thing here is, if I go to the 5 minutes, See how there is an inducement just at the fair value gap. So that tells me that, okay, this is a nice entry. So I'm gonna enter here very quick, and let's see. Price go in there. Okay, I'm in, and there was a very nice reaction, very nice rejection from that level. Just coming lower again, very close to the stop loss, and there you go. So okay, that's a 3-1 again, very nice. Back to the 4 hour. Today's is Friday 15th, so we got about like 5 more days. That's it. So in the 4 hour, I don't see nothing except this low right here, right? This low, as well as this low, as well as this high and this extreme high right here. So let's see where price goes to. Price is going up. And is this a sweep? If we go to 15 minutes. So this one is not a sweep. However, if it was a sweep, then this is what I see. There is no change of character. But if there was a change of character, this is what I would see. Fair value gap as well as this fair value gap. And there is nothing else here. There is nothing. So disrespecting those fair value gaps, it tells you that there is an opportunity to enter from somewhere in here, you know, as an inverse fair value gap entry. This is the advantage of the inverse fair value gap entry. But let's see if it's gonna hold. So price is back into the inverse fair value gap and then reacting from there, and you see price actually went all the way right here. Even if you don't have a structure, you can look for an indication of a market structure shift. So back to the 4 hour, let's see what we can do here. Right, price is going up again. This liquidity level taken 15 minutes. See what's happening here. There is no change of character, nothing. This is going lower. Okay, the change of character would be at this point, but you see this rejection right here. I don't like it. If I see displacement below this point, below this level right here, then I'd be looking for shorts on the New York session. There is no displacement below this point, so this is a sweep most likely. So I'm not really looking for shorts. And price keep going up. That's why I said, okay, I'm only looking for that level to have displacement below. 4 hour, let's see, price is going, approaching this level right here. Okay, one more. This is aggressive, I don't know. Back to 15 minutes, let's see what happened here. So here's the daily candle open, and it opens in a weird way. Now, you know, price actually took this level of liquidity. There is no respect, and we don't have kill zone, so we're gonna go back to the 4 hour, right? And let's see what happened. Price goes lower, and there is another sweep right here. There is this sweep. So going back to 15 minutes, see what's happening. We can see that it's on the lender kill zone. So lender kill zone, nice sweep with a wick, no fair value gap to enter from, and we're out of the kill zone. So we're gonna wait for the New York kill zone to start, and we have a sweep, another sweep. And what time is it? It's almost, yes. So this is the beginning of the New York kill zone, and there is a sweep of the 4 hour level, the same one. So there was a sweep here, another sweep of the London high at the previous 4 hour level, and we have a fair value gap. So this can actually be an entry for us. Bearish fair value gap. Since this is a very small fair value gap, we had a sweep only with a wick, then that's a valid entry. So we're gonna enter here, stop loss only above this high, and taking profit. Let's do 3-1 as always, and let's place an order. So it's still the beginning of the New York kill zone. Most likely we're gonna get filled. Okay, we get filled the next candle, and very nice. Price going lower, very nice. Price taking this liquidity level, nice rejection. Hopefully it goes lower. Okay, we're out of the kill zone, so I'm gonna, okay, and price goes to the take profit. Now we go to 4 hour again. What are some levels of liquidity that we can see here? So this one right here, level of liquidity. This one right here, a level of liquidity. Let's see where price goes to. Okay, there's nothing so far, and we're done. 1 month of data backtested. So those are the results for 1 month. You see right here, the account age is almost a month, and we had only 8 total trades. That's why I said just looking for multiple pairs for this strategy. But in a month, we had 8 trades, and the average RR is 3R. That's why we always take 3R. Then the ideal average reward to risk is 4.5, and you see how a lot of time price goes to more than 5.78. The win rate for this strategy is 75%, but this is not enough, obviously not enough, because we only had 8 trades, 6 winners and 2 losers. The main purpose of this video is to practice this strategy with all of you guys instead of just saying, oh, this is a strategy of 75% win rate. That's not the main purpose. The main purpose is to practice this, show you how I think, and we all practice things together. So you had a gain on the account of 16% in 1 month, 16% a month. Basically, you can pass an account, a funded account, and maybe get a payout too, like a small payout. If the next month you get like 16%, then you're getting a payout for more than 60%. Okay, so this is the strategy. Hopefully you guys like this backtesting session, and if you guys like it, you want more, let me know. Make sure to join the Discord, hit the like button, leave a comment, and subscribe to the channel. Share this with your friends. Make sure to watch the main videos of the strategy to have an idea about what we're doing. This is Mulham, and I'll see you in the next video.